Hello, everyone. Happy Sunday. This is Simon with AvaTrade. Thank you for your nice messages. I do feel better. Hopefully, I'll have better energy today and we'll be able to deliver better than I did last week. Welcome, everyone. Special welcome to new people. And we're starting our webinar, Mapping Out Your Week Ahead. This is Simon with AvaTrade. And as I always say, using this quote, you plan your trade and then you trade your plan. And that's what traders try to do. This hopefully helps us to create a plan, create structure, and create a little bit of a vision. What are we looking at the upcoming week, right? And that's the whole idea. Very simple. A few things about myself. My name is Simon Friedman. I'm a senior account manager with AvaTrade. I've been involved with trading for almost 25 years. June is going to be 25 years. It went like 25 weeks. I tell you, time flies. I started as a prop trader in New York City, and after doing that for about 11 years, I moved into a different way of trading, also started to mentor and educate others. And I'm very happy to have this great opportunity to be assisting our customers at AvaTrade. The agenda of the webinar, we talk about indices, stocks, commodities, Forex. We'll make some fundamentals with technicals. We try to see what happened last week, how the market ended, and we'll try to see what's happening or what's awaiting this upcoming week. We'll take a look at economic calendar. We'll take a look in general mood on the market, and then we'll take a look at individual instruments on the charts. Risk warning, you can find the full statement at avatrade.com. What we do here, of course, it's purely educational. We do not suggest any trades. We do not give any signals here. Social media channels, please feel free to subscribe. You have Telegram, you have X, you have YouTube. As I always say, it's my favorite. You have tons of information there for every taste. You have tutorials, you have educational material, you have all the webinars, including this one, are being recorded and posted on a regular basis. So don't stress. If you can't watch it live, you can always get it on YouTube, sit down, relax, and watch and learn. If you are watching this on YouTube, please feel free to click likes. We have a lot of views, but not many likes. So I'm just trying to find out, is it just hesitance or maybe you don't like it? So if you do like it, please click on likes, share it with people that you might think they benefit from it. And that's all pretty much. So before we go into the presentation, a few things about last week. Market in general had an amazing week. It's probably the best, not probably, but I think the best week since the new changes on the tariffs, a little bit easing there. We had Dow Jones, we're talking about the cash indices here, right? Dow Jones rose 332 points, that's 0.8% for Friday, and ended up week gaining 3.4%. S&P's gain on Friday 0.7%, and up for the week 5.3%. And Nasdaq was the biggest gainer on weekly basis. Friday gained 0.5%, less than two others, but for the week, the total gain on Nasdaq was 7.2%. Big move. Friday also, towards the end of the session, we had some not such great numbers from the University of Michigan Consumer Sentiment Index. And according to data here, I'm quoting here, the consumer sentiment ticked down to its second lowest reading since 1978 in the first 2 weeks of May, according to the preliminary results released Friday. The index fell to 50.8 from April reading 52.2. The all-time low was reading 50, recorded in June 2022, when inflation hit 9.1 annual rate, right? So the sentiment, the consumer sentiment doesn't look that bright. Maybe that's why the last 30 minutes of the, I think after our session, it was a sell-off on indices into Friday closed. Okay, so a few things. This is all over the news. You probably saw it already. The credit rating of the US was cut by Moody's. It was downgraded one notch from AAA to Aa1. Let's just read it together here. Years of rising deficit and budget chaos finally caught up with the U.S. credit rating Friday when Moody's Investor Service downgraded the government, stripping its last AAA rating. Moody's, in news release after the market close, said it had cut the U.S. ratings by one notch to Aa1 from AAA, and that the move reflects, quotes, reflects the increase over more than a decade in government debt and interest payment ratios to levels that significantly higher than similarly rated sovereigns. So Moody's was the last of the major credit ratings firm to strip the US of the AAA rating. Investors appeared to doubt the move would have much lasting market impact, but were braced for near-term reactions. All right. I mean, the picture is nice. The flag is still up, right? Trying to be sarcastic. All right. I guess things are catching up. We can't forever build up the debt and have a little bit of a chaos. It comes up. Now, this is interesting. Something that went kind of under the radar, and says here, why the Fed quietly buying billions in bonds and hoping nobody notices? How the Fed's stealth QE is bullish on Bitcoin, gold, and commodities. Interesting. You can, I mean, these are the articles from marketwatch.com. I don't know if you need subscription. I do subscribe for those and Barron's as well. So it says right here, the US Federal Reserve just pulled off something stealthy. That means secretly, right? Over 4 days last week, without fanfare, the Fed vacuumed up 43.6 billion in US Treasuries. That's 8.8 billion in long-dated 30-year bonds on May 8th alone, plus another 34.8 billion early this in the week. Not exactly small change. And it says that interesting article if you have a chance to read it. It kind of a lot of favor there towards gold and commodities of Latin America and Bitcoin, cryptos. So they're not cutting the rates, they're not doing anything obvious, but behind the scene, they're using other instruments to quantitative easing. Interesting. Now, China, also interesting article here. US-China tariff pause is just the start of a trade talk marathon. Of course, for us, that we thought that was the victory. It's not, because it's just pause, and I guess they're gonna have to sit down or somehow otherwise work the deal out. So let's just read it together. Chinese and U.S. officials' decision to temporarily ratchet back sky-high tariffs offered both countries the brief respite, and they left tremendous uncertainty about what is next. Now, the initial relief from the agreement for the 90-day reduction of tariffs, Washington is cutting the rate on Chinese imports from 145 to 30%, and Beijing is cutting on U.S. goods from 125 to 10. Is giving way to concern that a resolution may not be quick or clean. Tariffs remain far higher than most had anticipated. I guess we're going to hear more things. Another thing here, Trump is just, acting in his own style. It says attacks Walmart, tells retailers to eat the tariffs instead of raising prices. So we had a good report on Walmart, but they said they're going to start raising the prices because of the tariffs. They have to pass the price to consumers. So US President Donald Trump criticized retail giant Walmart harshly on his Truth Social platform on Saturday, arguing the company should stop trying to blame tariffs as the reason for raising prices throughout the chain. I'm just wondering, what should they blame? Earlier this week, Walmart told investors it would need to begin raising prices later this month due to the high cost of the president's tariffs on foreign nations, including tariffs. All right, I think I'm going to stop reading here. If you remember last week, we spoke about it. We said that maybe next reports on CPI will show the rise because that would be affecting, or affect the prices would be affected by tariffs, the summer prices especially. So that excitement of lower CPI could fade away really, really quick when the new data comes reflecting on tariffs. Speaking of Feds, these are the fresh numbers for the 18th of June meeting. As of now, the probability is low of rate cut, 8.3% only. Right? You can monitor if you like. You can just type CME Fed Watch or Fed Tool, and you'll get to this website. Now, economic calendar. A few things important to say about it. This is public information. You can access it on our web trader or the mobile app. You can also Google it. As I always say, it's important to know whether you use it or not use it. But if you are an active trader or involved in day-to-day trading, it's important to know these things ahead of time. So as I always say, you wouldn't be caught by surprise in a spike or a move that you didn't expect. So here, what I do, I take out the high impact events only, and the times are wow, I forgot what it is. The GDP, is it? Wow, I apologize for that, but that's the times. Monday, we have China production and retail sales. As we know, China is struggling, even since some analysts said even with the lower tariffs, it's not really helping a lot. China, as they are having their own process, they're a little bit in trouble, to put the least. The time is GMT. Somehow it just left my brain for a moment. Tuesday, G7 meeting that goes for 2 days, Tuesday and Wednesday. We have interest rate decision from Australia, very interesting. According to consensus, they're expecting lower interest rates here. Press conference and the statements following. Consumer Price Index, CPI from Canada on Tuesday as well. Wednesday, continuation of the G7 meeting. CPI numbers from UK, also important. They're expecting the rise, I guess, tariffs related as well. Thursday, another day, I guess it's 3-day meeting for G7. Budget release for New Zealand, Germany reports PMI numbers, European Union reports PMI numbers, UK PMI numbers, PMI numbers from US as well, retail sales from New Zealand, Thursday seems to be a lot of data, and then retail sales from UK as well on Friday. Now, just a reminder, this is only high impact events. There's so much more. You can browse through it, you can filter through it and see what's relevant to your trading. Also important to notice that next week, it's a Memorial Day in the US. The US markets, the stock market will be closed next Monday. So Friday technically will be the last day before Tuesday. So it's a long weekend. Please take it into consideration with your setups and positions and plans. Also, some markets are going to be closed on futures. Some are going to be having earlier close on Monday. So please check it. You can go to avatrade.com, go to trading info, and then go to holiday schedule. You can find specific information there that you need. All right, so that's economic calendar. Now, as a tradition, winners and losers for the past week. This is mix. These are all futures, mix of commodities and indices on the winning side. Cocoa was the winner, almost 19% higher. Nasdaq, we're going to take a look at all of them when we get to the charts. So these are just the numbers for now. Nasdaq up. These are the futures again, right? 6.27%. S&P's up 4.76, heating oil up 358, Dow Jones up 293, and crude oil up for the week 2.28%. On the downside, we had a big drop in natural gas, percentage-wise down more than 12%, coffee down 5.73, gold down 4.15, and cotton down 2.21%. So these are the things that winners and the losers for the last week. All right, we're moving to the charts now, and we will go through some instruments individually. Let's start with China. As you could see here, we did try to move out of the woods, and then we came back to the channel. So as of now, this 13,720, it remains a strong resistance as it had been for a long time. Japan, also towards the end of the week, it went down. The strength of the yen probably helped it as well. We're going to take a look when we get to Forex. We did close and held below 200-day moving average on Nikkei 225 Japanese index. Let's go to US indices. Strong moves since that 90-day holding period on tariffs. Just wanted to show you the last 30 minutes. This was the 30 minutes of after hours, right? We pretty much erased a few hours of the previous move to the upside. That's across the US indices. So I guess that Michigan consumer confidence added to it, maybe a little fear of holding over the weekend. I don't know what it was, but it was a significant sell-off here, right? The hourly chart, we erased 4 hours to the upside. So we were going up from 4 p.m. GMT, forming the high for the day, and then we erased it in the last 1 hour or the last 30 minutes pretty much. All right, but overall, here we go. S&P's 500, super strong week. It's a fourth consecutive week to the upside. Now the question, what's next? We are above all moving averages here. This is the high of Friday, which was 59.77 and a quarter. And of course, we sold the last 30 minutes after hours. So I guess very simple. The high of Friday should be our indication. Is it a resistance for now, and maybe some tariffs uncertainties and Fed's behind the back moves and Walmart attack on Walmart by Trump and other things could spook the markets lower. I guess we'll find out. So that's S&P's. Nasdaq, similar story. We had a very strong week. We came to also to the point of resistance from February 27, very strong recovery. We are above moving averages here, but as you can see here towards the end of the week, we had a little hesitation towards moving higher. So same story here, the last 30 minutes, a move to the downside Nasdaq. So it looks like that move was very strong. Some analysts say it was overextended reaction to the upside, so they're looking for correction. We're not gonna guess, we'll just see what happens. Now, Dow Jones also had a strong week, as we said previously. What helped this move, we had finally a little bit bounce of United Health. I'll show it to you on the chart when we get to the stocks. It was a little, pop up over there, so it helps also Dow Jones as it was lagging a little bit due to that sell-off on the United Health. Germany, it is not giving up, right? We did have all-time high on the 12th, then a little correction, breaking through and closing on the highs again. So we did close on the weekly. We just closed on the all-time high again. UK as well, we had the strong days, Thursday and Friday. We're coming to a zone of possible resistance. As you could see, a lot of tails try to move higher from here. Just draw the line of the last one. We right probably to the point over here. So this was the last attempt to move higher before we sold. The high here on FTSE was 8704.5, and we closed here a few points higher. So it looks like we might have the resistance here, but as of now, it looks strong. We had 2 consecutive sessions here closing at the high. So that's indices. All right, moving to equities. A few important things. Microsoft is super strong, as we said recently. It's #1 as far as market cap. I don't know what the number is, but it's easy to check. So it is challenging the all-time high, which we had back in December of last year. We had all week pretty much a move to the upside. Now, stocks also are sold in the extended hours after market. So we might see actually a gap down when we have an opening on Monday. It's also possible. But these opening and closing of the prices, the candles show only regular hours, right? So that's on Microsoft. We had Netflix and Uber making all-time highs. Super, super strong. Where are you? Netflix and Uber. Here we go. Netflix. We opened with a gap and we closed and pretty much at the same price as opening. Open and close within $1, within few cents. We opened at 1,191.91 and closed 1,192.08. That is 17 cents gain. All right, we're at the all-time high on Netflix. It's just moving higher. It was a little bit fear here on the tariffs that Trump announced on the foreign movies, but I guess the company or the stock price overcame that really, really quick. 3 consecutive moves, gap. And now, judging by this doji here, we could be moving lower on Monday. Again, it depends what the whole market is doing. But as you could see here, we did try. We sold. We came back. We covered the gap, and we still managed to close higher. So it could be also continuing. It's hard to say. As Netflix, it just acts on its own. It's a super powerful stock. It could be moving higher, but it could be also pulled in with the general market if the market decides to sell. We have Uber at all-time highs. As you could see here, Friday we challenged higher, but we closed below the 13th of May level here. On the weekly charts, clearly moving high here. A lot of positive things. I think the most important one is the teaming up with the self-driving cars company. And let's see how it works out. Again, I always say it's important to say if, even the strongest stock on the losing day could pull in, and even the weakest stock on the strong day could run up. So if the market starts really feeling some uncertainty and panic again, we might actually start correction to the downside. So even the big stocks could actually show some correction. That's important to notice. Tesla continuing higher here. If this move continues, we might actually go and retest the resistance from February when the high hit 367 and right before the sell-off. So far, it shows a lot of strength, a lot of gap ups, and we continue to the upside on Tesla. Now, NVIDIA. I've been watching NVIDIA, as many of us have. And important to notice that around 136, NVIDIA is having a hard time breaking that level. Let's take a quick look. That's what the sell-off happened back in February around this level, 135, 136. But if you bring 1 hour chart, take a look. We did try on Friday to break it a few times, and every time we had that resistance around 136 number. And here we go. We're sitting right on top of that candle. So the question is, will we continue? As we all know, there were partnerships signed up with Saudi Arabia, with the AI business, with NVIDIA. Trump had a very successful trip. It's also important to mention a lot of money been promised so far for different projects in the US. There was a big military deal or weapons deal signed up and other things. I guess we'll see what happens. But NVIDIA, it did react to it, as you could see here, as the whole market did pretty much. We moved higher with gaps. And when we reach this 135, 136 level, we start really having a hard time moving higher there. Just I know some traders might hope to 140 number, even higher. This was the level from 18th of February when we hit the high of 143. And let's see what happens. So that's on NVIDIA. Another interesting, before we go to the banks, I have some interesting news for you on the banks. So Charles Schwab, we don't talk about this company a lot, right? It's one of the brokers, the banks. It looks very strong, and I tried to look into it and see what's the story there. Where is he? Here we go. Take a look. Pretty strong move to the upside. And at some point, it was really lagging when the banks were moving higher. So strong. And what I found was the following, that Deutsche Bank increased the target of Charles Schwab from $89 to $100. So as you could see on the monthly chart, that would be actually all-time high possibly, as we had the high here from February 2022, the high was 96.18. As you could see here, a strong move up here on Charles Schwab. We're moving higher, and that price target 100 could be achieved as well. So that's on Charles Schwab. Now, three other stocks important to mention. We spoke about Boeing with China starting to accept those Boeing that were on freeze, and other military contracts, and now there's some contracts signed with Middle East. So Boeing did great recovery here from what was that, the low here, below 130 all the way to above 200. Now Friday was selling here on Boeing. We're going to watch what's happening here. If we continue lower, we might be looking for some kind of support. We could find it probably around these numbers, or of course the 200, the upcoming 200 psychological level could be holding Boeing as well. Now Disney has moved nicely. Good reports and announcements of opening in Abu Dhabi the Disneyland or Disney World. I almost mixed those two up. It was accepted very nicely, and with a lot of excitement, the stock moved higher here, and we closed on Friday 112.71. If we continue higher, the 115 area somewhere there, we could see some kind of resistance here. Where so far we look very strong here. The only thing, we didn't close the gap. So sometimes when the gaps are not closed, the instrument has tendency to come and retest and try to close the gaps, but it's not always happening. So that's on Disney. And United Health, like I said, it did help a little bit to Dow Jones this past few days. We did hit the bottom here on Thursday, the low 248.56. Then we gapped on Friday and continued closing at 290, almost 291. So if this continues, we might be trying to close that gap. That would bring us above $300. The low here, the gap closing would be around 307. So that's United Health. Now, interesting developments on banks. As I always say, the banks are important to watch as they usually leading the market, or when the market sells, they're really reacting to the downside. So we had a nice week for Goldman here, with the gap continuing, building up nice candles here. JP Morgan, the same thing, which is broke about the previous resistance, trying to establish the new support. Bank of America as well. It looks very nice here with the gap and continuation. Citigroup as well. We are trading above the previous resistance here, approximate level around 75. So it looks good, right? Now, what was reported by Barron's, and specifically by Andrew Barry, who's the analyst for Barron's. I'm just going to read it to you here. Berkshire Hathaway CEO Warren Buffett appears to be soaring on bank stocks, a sector that was one of his favorite just 5 years ago. And I'm continue reading from his report here. Berkshire eliminated its holding in Citigroup, selling nearly 15 million shares for an estimated $1 billion during the first quarter, according to its 13F filing late Thursday. All right. Now we're continuing here. It also continued to pare its holding in Bank of America, selling about 49 million shares, or 7% of the holdings. Berkshire now has 631 million shares worth about 28 billion, with Bank of America stock at around $44. Right, Bank of America. That's the price for now. Now, the question is, he already sold it, but he just reported the Citigroup late Thursday. So when the public finds out, and I know from the experience, and you probably do too, Warren Buffett is someone that the public is really, I don't know if the trusting is the right word, but really following and paying attention to. When he buys something, everybody's buying. When he sells something, everyone is selling. And if you remember a while ago when they reported they started to sell Bank of America stock initially, it did react to the downside. I don't remember where it was, maybe here. I'm not sure, so I'm not going to make it up. But I would be watching the banking sector following this posting here. And on the positive note here, it's in the same article. I'm going to skip a lot of things with the numbers, but it's continuation of this article by Andrew Barry. It says it owns 45 billion stake in American Express, a long-standing holding, and stakes in Visa and MasterCard. The American Express interest in Berkshire's second largest holding, behind only Apple at 63 billion. And the last paragraph here, it's very important here. Amex and Coca-Cola probably are the only quote unquote forever stocks in Berkshire's nearly 300 billion portfolio, meaning Berkshire is unlikely to sell them even when Buffett's successor, Greg Abel, becomes CEO in 2026. All right, so we should be watching banks on possible reaction from the market participants on this move of Warren, or continuation of getting rid of the bank stocks. And we should be looking at Amex, American Express, and Coca-Cola, as it states in an article that they are forever and they will not ever sell them. But again, nothing is forever, right? So those are the updates, updates from Berkshire Hathaway, from Warren Buffett's actions on the market. Now, moving to the gainers and losers for the week. So we spoke about Nasdaq, S&P, and Dow Jones. So we're just going to stick now to the commodities here, right? Cocoa. Again, it plays the same game. Consolidation, tried to move, broke through the previous double top here, and robust move to 11,000 here. We did hit 11,000, right? 1154, and we settled at 10,926. What a roller coaster here, right? And it's of course all this is market manipulations and speculations, whatever you want to call it. But the fact remains the fact: there's a shortage of cocoa in West Africa, and as long as it continues, the volume of cocoa remains strong. Heating oil is the next one. By the way, cocoa oil, like I said, it was up for the week almost 19%. Heating oil up 3.58% for the week. Here's the move for the week. A little retracement on Friday. We are rejecting here the previous resistance from 25th of April. As you could see here, with a nice attempt here, I think it's Wednesday, came right back. Another attempt on Thursday, closed flat. And then I guess the buyers just got tired and said, you know what, let's just take profits. And we're sitting right on 50-day moving average. That's the heating oil. And crude oil as well. We're having this ceiling at 50-day moving average that we hit here on the 13th. Next day we sold. We tried to go lower, came right back. So pretty much we are trading within this candle of 13th of May, which has the low at 61.64 and the high at 63.89. That's a $2 and 2.25 range is still holding. So what we need to see if we're planning to move higher, we need some solid closing above this candle, above 63.89, 64 would be nice. Or if we're trying to move lower here, we would need a solid closing and some resistance build up below the 61.64. So this candle is at 13th of May. It's significant as we are trading within that candle for the past 3 sessions there. All right, moving to the losers. Natural gas had a nice drop, 12.38%, and on the daily chart, we did close below 200 moving average. I confirmed it the very next day on Friday. So after trying again, breaking through the stop, we failed to break it, and we are showing some bearish momentum here with the whole week pretty much in red, right? Let's see the weekly chart, what it tells us. Okay. We are still within the week of April 27, losing roughly 60% of the gain. So let's see what natural gas will bring us. Coffee down 5.73%. We are kind of hugging this level here. So you could see a lot of actions here. We had bounce from this level of February 26. We had another move which followed the high that was on April 22nd. And now, as you could see, very interesting. We have pretty much equal bottoms here, right? Down, up, down. Low here, 363.20. Next day, 362.75. And low 362.85. So Friday's low is 10 cents higher than the Thursday's low. It looks like we are building something here. It looks like the buyers are not, sorry, the buyers are, yes, they are not giving up their desires here to buy. So you could see here, almost the same level from which we had a nice move back that started on the 22nd of April. Let's see what happens here. We are below 50 and 100 moving average, still above the 200. So we could bounce here, and if we are continuing, that would actually mean a high here. So we could probably turn to the upside here in coffee. And of course, the opposite can happen. Maybe the buyers could give up on this level here, and the sellers could push it through as they tried. And in that case, we would continue lower and try to look for possible support around these 335 levels, 340. And if we're moving lower, the 200 moving average, of course, would be the major support. And of course, right here, when we had the double bottom here, followed by some consolidation and shooting to the upside. So that's on coffee. Gold. Gold is holding. By the way, that article, the Fed's buying treasuries. There's a lot of gold being bought by China, and article says that the China could be converting their dollar to gold, which would push the gold higher, and of course would weaken the dollar. So that's something to really pay attention to. We'll talk about dollar when we get to the forex, but here on gold, we're still holding that 3,200 mark. We did have a spike below, and we still closed the week above 3202. As you could see here, the low here was 3201.80 2 weeks ago. This is the weekly chart. I just stretched a little bit, right? Then we had a fake move, not the fake, but the failed move to the upside. And now we tested the lows again. So it looks like these tails are trying to create some waves and establish some real levels where the real buyers and sellers are, right? So it's going to be an interesting week in gold to be really watching what's happening there. So gold up, down 4.15%, and the last one is cotton, also coming to the level of possible support here, down 2.21% below the major moving averages here, right? So that's commodities. Let's move to forex, and we start with dollar index, as we said. Today we spent a little bit more on stocks. That's really good, and then probably we're going to take a little bit more time, so please bear with me. Forex, US dollar here. We had a nice move at the beginning of the week. We hit the 50-day moving average here, and then we had a correction to the downside here, right? The question is, what's next? There was a lot of build up here. It was a move high here, but we did not reach the previous strong resistance here. So we could be going down, retesting this, tight channel here between 99 and 100. It could be happening, and especially in the light of this Fed's action, the article that I showed you, and gold being bought, and China potentially converting US dollars to gold. We could see some weakness in the dollar. It could actually happening. It could be happening. So as of now, our immediate support is right here. The 3 consecutive sessions from which we shoot up here, and that was back. And this is the weekly chart, right? 3 consecutive weeks that we shoot up. This is a serious level here, and it's around 101. Of course, the psychological 100 level would be valid as well. So we'll be definitely watching US dollar for this week. Now, Japanese yen, as I mentioned, has been strong this week. Take a look. Dollar sold against the yen pretty much the whole week, and across the board, all the major currencies sold against the yen. This Australian dollar, Canadian dollar, even Swiss franc shows weakness against the yen. So it looks like yen is gaining some momentum here. So definitely this is the week to watch. Will this strength of yen continue, or we're going to see some corrections in the upcoming week? Now let's just run through majors. Of course, it's just the mirror of the US dollar. On euro, if you remember, we said that some analysts predicted some rally in euro. This week, dollar was continuing to be strong. We're sitting right here on a 50-day moving average here. British pound is trying to fight the trend line here, as you could see here. We did have a nice reversal here on the 13th, erasing the previous day, but then we're pretty much flat there. Euro pound has been weak, and it looks like we're building some kind of a plateau here. The question is, will it continue lower, or maybe after some consolidation, we might go into correction to the upside. USD CAD has been strong here. Nice recovery from this 138.25 level, and having a hard time going higher. We still have this dead cross in play that we mentioned, when the 50-day moving average is below 200. let's see what happens. Of course, the prices of oil would be affecting Canadian dollar as well. So the weakness of oil in the past few days kept Canadian dollar weak as well, in addition to other factors. Now, Swiss franc. Swiss franc dollar did try to run up. We hit the 50-day moving average, and that stopped the move. Since then, we've been sliding lower, also trading within this May 12th candle. So here, similar to the previous scenarios, when we break below this the May 12th candle, we might see continuation to the downside. And the opposite, of course, if we break above, we might continue and establish some price actions here above this level, above the 50-day moving average, preparing for the further move to the upside. But just to remind us, still, as always, we have three safe haven instruments, the major ones, which is gold, Swiss franc, and Japanese yen, that traditionally being affected by sell-off in the market. When the risk off comes in, those instruments tend to move higher. So this week, if market reacts to further uncertainty, the consumer confidence drop and other factors, and the Fed's moves behind the scene, we might see a sell-off in the market, and we might see the move to the upside in Swiss franc, Japanese yen, and gold. And as always, for dessert, let's take a quick look at Bitcoin. As you could see, we did have a nice move. This was the last strong move on the May 8th when we broke through the 100K. And since then, we've been really building up a lot of consolidation here, possibly preparing for continuation. Right? When you see a strong move up and the trading in the top segment of that move, most likely, again, nothing is for sure, most likely continuations to the upside. Of course, always the opposite scenario could be possible. And XRP is actually the opposite, where the move to the downside on XRP here on the 15th, and we are trading at the bottom of this candle, but we are above all the moving averages, the 50, 200, and 100 moving average. So let's see what crypto will do in the upcoming week. Okay, let's summarize things. We did have a strong week that ended up with a little of a sell-off the last 30 minutes with that consumer confidence number coming in. Some analysts said that this tariffs on hold, it's just a temporary relief. So we facing or possibly facing more uncertainty in, as they call it, the marathon. It will take time to fix it and to regulate it and to bring it to some logical conclusion. So that potentially could add more uncertainty to the markets. We have Warren Buffett slowly getting rid of some bank stocks. Also, we should be watching that as an effect to the downside. We should be watching the stocks that we mentioned: NVIDIA, Netflix, Uber, Microsoft, Tesla, Charles Schwab, Target to 100, getting closer there. Boeing, Disney, United Health, and we should be watching gold on possible moves from China, as some analysts predict, on converting US dollars into the gold, and some other central banks buying gold as well as a protection against inflation. Again, very important, next Monday, the stock market in US will be closed. Some other futures are going to be trading different times. Some are closed, some are going to be having a short session on Monday. Please check the hours. Don't get stuck in the positions that you wouldn't be wanted to hold for the long weekend. Enjoy the weekend, spend some time with your family, your loved ones, get some energy, get prepared for the intense week. I think we're going to have an amazing week coming up, so be ready, have a plan, protect your capital, have a risk in game in play, and all the best. Take care.